Well, I think in the short term there is the possibility that the market could continue higher based on positive technicals. Given the fact that it has broken higher, we take the view that it may continue up for a few more weeks. But from our standpoint, we are neutral, the Indian market, within our global positive bias towards equities. So we do like equities at the global level, but we do prefer the US and Europe at this point in time, and I have more of a neutral allocation to India within our Asia ex-Japan underweight. Now, just to give you some specifics in terms of the India market, we do think there are great opportunities within the market, in particular sectors like technology, for example, industrials and healthcare, but we're a little bit more concerned in terms of the impact of tapering. We're expecting tapering to take place sometime in Q1, and on the back of that we're expecting yields to pick up in the US and also for the US dollar to strengthen against, aside from others, the Indian rupee. So we're expecting the rupee to weaken by around 5% or so over the course of the next 12 months, which is obviously going to impact the returns from the Indian markets. But overall, we would take the view that the market could, over a 12-month period, generate returns in excess of 10%. Well, we're actually recommending to clients to do a modest switch between IT and healthcare. So we like both spaces, but we've actually been very overweight IT now for around 6 months plus, which has actually worked obviously very, very well, given the fact that the sector is up close to around 50% on a year-to-date basis. So we see some opportunities on a stock-specific basis within the healthcare segment. There have been a couple of laggards, and we expect them to perform a little bit better. Likewise, industrials, we have seen the order books come in quite nicely, and we're expecting the industrials to play catch up as well. Technology, though, it has performed very well, but when you look at the underlying fundamentals for technology, it should remain quite a strong sector going into the 2014 period. Yeah, it's been a very strong move, but if you look at the performance overall of the emerging markets, particularly the ones that you just mentioned, they've actually lagged the developed markets like Japan, the US and Europe on a 12-month view when you look historically. Going forward, there is room for catch-up, but we do, as I said, think that tapering will impact returns negatively. And the second point of view is when you look at the growth coming out of the US and Europe, growth is improving. Expectations for growth is improving, hence our modest bias towards the developed markets relative to EM. In terms of India versus other markets, if you look at Russia, for example, it's very, very cheaply valued at this point in time. Likewise, China, in our opinion, is quite cheap, particularly the financials. Now, obviously, there's a lot of risk within the financial segment, but there is some value there as well. So we don't see India necessarily outperforming EM significantly at this point in time, hence our neutral allocation to the market.